Hi everyone, this is Martin, and this week's video is all about algorithms, how to trade with them, what they are, and later on I'm going to show you my personal algorithm. And algorithms have been getting a lot of attention online lately and on blogs. There's a lot of information coming out on algorithms and why algorithm trading is so popular. So with all this attention, I want to talk to you about my personal algorithm, and let's get right into this presentation. Okay, first of all, I've got two important questions for you to answer. First of all, computer time. How much time do you spend on the computer? Okay, so check one box to the left side here. Do you spend 1 hour or less on the computer, like trading, looking at the charts and so on, 1 hour or less? Or do you spend 2 hours or more? Okay, so now we're spending a little bit more time. Do you spend 4 hours or more? Now that could be dangerous because we're talking about an addiction to Forex trading here. You never want to be addicted to the computer, and that's obviously the more time you spend on a computer is less time with the family, with the kids, your better half, and onto more important issues. So, and the lastly here we've got and if you're really honest, you can check this off: lost track of hours. In other words, you're spending so much time on the computer that you really lose track of all time, and you just wonder where time has gone. So this is if you spend a lot of time, these are the traits of a very unhappy trader. Okay, now next important question, guys. Okay, and this is, how do you spend your time? So not only do you spend a little bit of time or a lot of time, I want to know how exactly do you spend your time? Do you, first of all, you can check off the boxes on the left side. Do you overanalyze? In other words, when you turn on your computer and you're ready to Forex trade, you start overanalyzing. You're looking at charts. You're analyzing the different patterns, like the triangles, the head and shoulder patterns, the breakouts from trend lines, the ABC patterns, the patterns or the levels once you put up your Fibonacci indicator or your pivot point indicators. In other words, you just overanalyze, spend too much time doing that. Or two, do you overtrade? That's another thing where you can spend a lot of time, guys. Do you take one trade after another, one trade after another? I've known some traders who have taken as many as 20, 30 or more trades in a day. Obviously, they're scalping. They're looking to score it big over the really short time frame. They're just over trading, and guess what? That just leads to bad money management. You're going to get a headache from this and anxiety, and in the end, guys, you're going to end up losing some, if not all, of your money. Or do you anxiously watch an open trade? And by that I mean, you've got a trade open on your charts, okay? So you've taken a trade and you're watching it, and you're continuously watching. You're so afraid to take your eyes off the computer for fear of losing money that you just continuously watch the trade. Obviously, if the trade is going in your direction, you keep watching because you're not too sure when to close the trade, how much profit you should take, and again, the overall fear of the trade going against you, and you certainly don't want to be caught napping, right? So that's what we mean by anxiously watching an open trade. And finally, procrastination. Now, this is also a really problem area for a lot of traders. Procrastination means you just can't make up your mind. You're overanalyzing. You're spending time watching the charts. You're not too sure what is really happening in front of you. In other words, you don't have the confidence, and you just let time slip by through your fingers. Before you know it, you've spent hours watching the computer and not really trading at all, okay? And that is called procrastination. Okay, so you don't want to be caught doing that. Okay, now with all that introduction, my name is Martin. You can see me right here. And below, if you want to contact me, by the way, you can do that. mskyj007@gmail.com. I'm a proud Canadian trader, and I'm broadcasting this video from Toronto, Canada. Yep, I'm Canadian. And there aren't too many good professional traders here in the in Canada that do put out videos or that do put out blogs or have an internet website or whatever. But I've been producing these videos for about 2.5, maybe close to 3 years now. I also teach live here in the Toronto area. I have classrooms all the time with 20-30 people attending, and so I'm very popular and doing very well on my own, and I'm always glad to help anyone. So if you want to contact me, you can do so. Again, it's mskyj007@gmail.com. Okay, so again, this video, algorithmic trading. Now that's a mouthful. Algorithmic trading help is on the way. Okay, now think of an algorithm as a recipe, okay? And that's the best way to describe what an algorithm really is. So an algorithm, or an algo, and that's a short word for algorithm, is simply a set of instructions or elements that helps you to trade your account and free you from the stress and difficulty of trying to think of everything yourself. Now, getting back to what I said in the beginning, how much time do you spend on the computer? And what do you do when you're watching your monitor when it comes to trading Forex, right? So the whole point of an algorithm is to free up some precious time so that you can spend that with your family and do other important things. And it's important because an algorithm can help you clarify or can help simplify your trading process. So again, think of it as a recipe. Let's say you want to cook or a meal or bake a cake, okay? You will need a set of proven instructions with the right ingredients, and that's the important thing, the right ingredients on what to do for your meal or cake to come out that tastes good. So that, in simple terms, in a simple way, describes what an algorithm is, okay? Now, algorithmic trading, now that again is a kind of a derivative of the word algorithm. It's a descriptive form, and it's a set of instructions based on rules-based strategy for buying and selling trades. So the algorithmic trading is the process. The algorithm is what it's all about. But when you're trading algorithmically, okay? And can either be, and this is really important, a lot of people think that algorithms are based on robotic intervention. Robots are trading the accounts for you. They're used by large hedge funds and institutions and all that. But part of that may be true, and there's some very complex algorithms out there based on fundamentals, based on statistics. They can be complex in a mathematical formula and so on and so forth. But algorithms can also be traded by ordinary people like you and I, okay, and the retail traders. And I'll explain a little bit more about that in just a second. But again, there are two types. It can be completely automatic with the use of an EA or an expert advisor. You've heard of that, right? It's called a trading robot that you can attach to your chart. So you can let the charts run by themselves. You don't even have to be there. And the robot will trade for you according to a preset set of instructions and what your algorithm is based on. And the other type is a completely manual system executed by the trader. That means you, me, and everyone else, and people just starting out. It doesn't have to be a robot or anything like that. By the way, expert advisors and robots can be expensive, and they're not always proven as well. But so the other way of algorithmic trading is a completely manual system. Okay, now trading elements. And I want you to take a look at this on the left here. You can see a typical Forex chart, okay? We've got some lines there. We've got an indicator below the chart. We've got a price pattern here, right here that's shaded in. So I'm sure most of you already understand this part. Most likely you're already trading with some indicators on your chart. Have you used moving averages, trend lines, Bollinger Bands, pivot point levels, Fibonacci levels, the RSI and stochastics, the MACD, and so on and so on and so forth. So there are hundreds, if not thousands, of indicators that you can choose to put on your charts yourself, okay? And that perhaps is one of the problems. There's just too many out there, and you would have to try each and every one to see how they fit together and to see how successful you could become with the use of indicators. So yes, you can also put together an algorithm based on these indicators. Now these are some of the elements or ingredients, as I said, as if we were looking at a recipe for baking a cake, but these can be used for trading. But I want you to understand one thing, but by themselves, they do not make an algorithm, okay? I want you to really understand that last important part right here. Now, what is an algorithm again? Okay, again, it's simply a set of instructions or elements. Now, by themselves, okay, and I'm going to circle this, by themselves, they do not make an algorithm. So just because you have a bunch of indicators in your charts and you're trading with them does not mean that that makes an algorithm. Unless, okay, this is important, unless together they are proven to provide the desired successful results during, and I'm going to underline that, back testing and forward testing. Okay, so this is important. An algorithm only works if it has been proven and given you the desired results during back testing. What does back testing mean? Well, you go back in time in your charts, let's say 1, 2, 3 years or more, and then you go forward and you see how well your algorithm works, how successful the wins are versus losses, and so on and so forth. And forward testing means with brand new chart, you don't know what's going to happen tomorrow. You're actually testing live. You're using these indicators and logging your results. Remember, always write down your results and keep a log book to see how your indicators and your algorithm works. And this is called forward testing. Okay, let me just take that off here. Now, stress-free algorithm. Okay, I'm going to talk about that in a second. Trading is stressful, even when things are going well, right? I'm sure you agree with that. So you may be doing well, but it is stressful when you're on the computer. However, 90% of all traders are losers as a direct result of emotional trading, right? Trading is very emotional, because most traders do not have or follow a step-by-step plan. Now, a good mechanical strategy using a set of indicators or called an algorithm is seen on your charts can help lower the stress level by helping traders make good decisions quickly and easily. And I call this stress-free trading. Now, I do stress-free trading. I'm going to show you my personal algorithm in a moment, but this is so important, guys. If trading is so stressful to begin with, even if you're doing well, and you know, and it's well known on the internet, you can just research this, that over 90% of all traders are losers primarily because trading is an emotional, it's an emotional thing that does overcome you at times, whether it's good or bad. It can be very emotional, giving you anxiety and stress, okay, causing stress levels to rise. That's why people have gone to algorithms, and that's why the story of algorithms has become pretty important over the last couple of years. There's a lot, like I said, a lot of information now coming out. There's a lot of online information that's being put out on YouTube about algorithms, and you know, I'm doing my part telling you that using a proper algorithm can truly help you save time and reduce your stress. Okay, now stress-free algorithm, the odds for trade entry are increased in your favor when you use a good algorithm or a mechanical system of indicators. A good algorithm manages the trading process from start, which is the entry. So from the moment you enter a trade to the time you exit a trade, the algorithm acts as your personal trade manager assistant. In other words, you'll never be lost. You will always know what to do. There's never any guessing or foolish gambling, okay? A good algorithm never gets frustrated, doesn't overtrade, risk too much of your money, and changes your plan midway through a trade, right? Or, you know, it never changes if you think things are going well, or you've had two, or things are going poorly. I should say you've had 2, 3, 4 losing trades. You want to stick to your plan. The algorithm will help you do that. And at some point in time, if it was a proven algorithm giving you the desired results, then you'll get back in the winning ways pretty quickly. It's just you just had went through a short spell, rough spell of a few losing trades. And by the way, all traders have this, do this, and it's important to stick to your winning system. Okay? Now, anyone can make their own algorithm. You can make it your own, but first you need a purpose, and this is important. You need a purpose and what you expect from using your algorithm. You need a results-based strategy, giving you the desired results for your trading personality and tolerance toward risk. Most people don't understand this. I put out a bunch of videos in the past about trading personality and risk management and that, and go back onto my YouTube channel and look at my previous videos on this. So most traders don't understand that you have to trade according to your trading personality. Whether, you know, and it all depends on how much risk you're willing to take on, right? Whatever indicators you put on your charts, it can't just be a random set of indicators just because you see other people putting them on, or you've heard, or you've seen a lot of YouTube videos telling you about the stochastics and the RSI and some of the other indicators. Just because it's done and they're only showing you what they want to show you. It may not be a winning set of indicators that form a proper algorithm. So please pay caution to that. Don't just put on a random set of indicators. You really have to test them out, okay? Now, my winning algorithm, this is what you're waiting for, right? Okay, I'm going to show you in just a second. My algorithm is super easy to use. The reason for this is color, right? I use color-coded indicators, a lot different than most other people out there, okay? I want to make it much easier for you to process, understand, and act upon. In other words, act upon meaning making good decisions. Reading price action on a chart is actually now easier than ever, and entry signals can be evaluated in an instant. Okay, so here's my easy algorithm strategy. Take a look at the charts, guys. You can see it's all color-coded. And, you know, first of all, just I would pause the video. Just pause the video. This is the CAD Japanese daily chart. Can you figure out the entry strategies? Can you also perhaps figure out the exit strategies? So entry means, you know, opening a trade. Can you figure out the exit strategies, meaning closing the trade? Can you see where money management might come in and what you could do as the trade is moving in your favor? Okay, so take a look not only at the chart, but the indicators below the chart. How do they correlate with each other? Do you see anything familiar? Do you see anything pleasing? Do you see things that are pretty easy and I'm sure all of you guys can do that. Just spend a few moments looking at the chart. I can't give you the strategy right now. That's a little bit for later. But again, I'm giving you an opportunity and a quick peek at my algorithm. Okay. Now, here's a quick summary, and you should always pay attention to this. A good winning algorithm with indicators should have a clear, uncluttered chart that is easy to understand. Simple display of market strength, up, down, or sideways. The algorithm should have simple rules for an entry signal. Should have simple rules for exit strategies when you are in profit. So exiting a trade or closing a trade when you're in profit, and when you're in loss. So when the trade goes against you, how are you going to exit the trade without fear and without anxiety? A good algorithm should have a built-in money management plan that is easy to follow. Should have rules for making instant decisions. And guys, I'm telling you, that is the key. The key is to save time, right? Okay, now, one last important thing. Your algorithm must have and must include safety first. This is so critical. It is actually, this is what trading is all about. You always protect your money, and you always prevent a loss from becoming a big loss. So you become an excellent and wise trader when you first learn to protect your money, always. A good algorithm tells you when not to trade. Now, that's something that most educators online, if you search online, there's all kinds of strategies, there's all kinds of things you can buy. Nobody tells you when not to trade. They always tell you how easy it is to trade, how to get into a trade. They show you the entry signals and so on, but they don't talk about when not to trade altogether. What are the signs on the chart that tells you not to trade? So for a favorable trade entry, all the indicators that you have on your chart that you've tested need to agree that the conditions for trade entry are valid. And if not, then do not trade. Now I'm going to give you another quick peek. This is the same chart as the previous one. It's the CAD Japanese yen. You can compare the previous chart, which didn't have any information on along with this. So the algorithm shows you that here's a false breakout. You can take a look right there. False breakout, so there is no buy entry. The buy entry is good over here, right at the top of that white candle. Okay, so that's a good entry. Here you can see again there's a false breakout to the downside. Now some traders would say, wow, do you see see right there, a big black candle right there, and let me just use the marker. So they see a big black candle, right? And it's time to take a sell trade. But no, that's not what you want to do. My algorithm tells you when to stay out of a trade. Here is a good entry right there at the bottom of that big black candle, and you can see price went down. Okay, false breakout to the upside again right there, guys. My algorithm tells you to stay away from a buy trade. You see a big, and that's the problem with a lot of new traders, right? They see a big white candle pushing up, and they think it's time to go, time to buy, take a buy trade, right? But in this case, you see the trade went right back down again. Here you can see is a good buy entry at the top of that candle. Price went up, made quite a number of pips. Okay, and then again here is another good buy entry from here. Price went up. Okay. And by the way, here, I didn't mark it. I forgot to mark it. Here is a false sell trade. So you can see black candles going down. A lot of traders would have made or entered a sell trade only to find out they were wrong and price immediately reversed, right? And here at the bottom is a good sell entry as well. So the algorithm, guys, tells you when to trade, but most importantly, and let me just clear the chart there. Most importantly, tells you when not to trade. And guys, if you have an algorithm, you found a set of indicators that can really help you do that and tell you when not to trade, you've got a winner, guys. That is amazing, and congratulations if you found the right set of indicators to do that. Okay, so that's something that price action traders actually can't do. Price action traders are trading off of levels and basic and chart patterns and that, and they're looking for bounces off of support or breakouts through support or resistance and so on, and often find that they're wrong, and that's because they don't have anything in their system that tells them when there could be a false breakout. Okay, so that's important. That's one of the important things that indicators can do if you've got the right indicators and you know how to use them. So finally, I've got a free ebook, guys. I will soon be releasing my proprietary algorithm system along with a complete set of instructions and all the rules. If you want a free ebook called Algorithmic Trading, Help is on the Way, then please contact me. This book describes my algorithmic trading strategy with more information and chart examples and how it could help you. Then please email me. My name is Martin, and here's my email again, mskyj007@gmail.com. Guys, if you email me, I'm not going to hound you. I'm not going to try to sell you anything. I'm not going to, send you an email every second day asking you to buy this or buy that. Guys, I'm not like that. If you know me, I don't do these things that a lot of other marketers do. Okay, I'm just trying to help you. I'm trying to get you the right information. And if you want more information on algorithmic trading and how it could help you, then please, guys, contact me again. It's mskyj007@gmail.com. Love to hear from you guys, and don't forget to subscribe. Click on the like and comment buttons below the YouTube channel. It's important that you click on the bell, okay? Because once you click on the bell after you hit the subscribe button, all future YouTube videos will come right to your email box or your inbox. Okay, so take care, guys. Happy trading, and happy Thanksgiving to everyone. I'm producing this video on Thanksgiving weekend here in Toronto, Canada. Some places in the world they have Thanksgiving a little bit later on, like in the US. But for everyone that's celebrating Thanksgiving this weekend, then all the best to you and your family. And it's a terrific time to appreciate what you have. And we will talk to you again at my next video. Bye for now.